Hello traders, this is Blake Morrow and you are listening to the week ahead video for June 16, 2019, and I have a lot to talk about today. There's a lot happening this week, but before I do so, I just want to say happy Father's Day to all the fathers out there. I'm actually filming this video a little earlier than normal because I myself am, I guess, being celebrated for Father's Day. We've got a lot of things that our family is doing today as a result, so I wanted to get this video out kind of quick. Therefore, the analysis that I'll be doing is going to be mostly on the charts of my own charts, just because they are currently being updated by our team, and usually have been, they'll be wrapped up in a few hours. But like I said, it is Father's Day, so I'm going to be away from my desk for the next few hours myself. So I have wanted to film this early. So anyway, happy Father's Day to everybody out there, to all the fathers out there. And for the rest of us, let's talk a little bit about what's happening this next week. Oh, before I do so, yeah, if you haven't tried out ForexAnalytix, make sure you do so. It is only $1 for 10 days. When you try it out, make sure you also download the mobile application. This way you have all of our analysis, our updates. When we have a chart pattern that has developed, or we change our macro ideas on a specific currency pair, or you want to be involved with our exclusive ForexAnalytix chat room, you can do that as well. But do it on your mobile app if you're away from your desk. So you can do that on the Google Play Store or the Apple Store. All right. Let's talk about, and let me move this data flash. This is where you get all the news events that are coming out. Let me move that off the screen. Let's talk a little bit about what's happening this next week. I mean, this next week's a busy week. We have a lot happening. Let me see. Let's go to this week here. Just so you have an investing.com. Schedule of events, all the events that are happening this whole week. You can find them here, but let's talk about them. So the ECB President Draghi is talking Monday through Wednesday in Portugal. So we're not expecting a whole lot from the ECB president. It's probably going to maintain a fairly dovish stance, but that's not the key component of this next week. This next week we have the Fed meeting now, and the Fed's not the only central bank that's meeting this week, but we do have the Fed meeting and the FOMC statement, which will be on Wednesday. And like I said, that's going to be the more important event, as the market is expecting the Fed to keep rates on hold, but really prep the table for some rate cuts moving forward. So the market is looking for a fairly dovish Fed, but if the Fed's not super dovish, we could see this continued dollar rally that we saw going into the end of this last week. But like I said, it's not just the Fed that's meeting this week. We have the BOJ, we have the ECB also on Thursday. And with the a change in leadership, it's going to be kind of more of an interesting Bank of England meeting. And then at the end of the week we have Eurozone PMIs, and we're going to see if the data continues to move lower in the Eurozone. And we have Canadian retail sales. There are other things that are happening throughout the course of this week, but I just wanted to highlight the central banks that are meeting, which is the BOJ, the Bank of England, and also the FOMC. Alongside, there's some emerging market economies that are also meeting this week. The Nordic Bank is meeting, so if you have any NOK, exposure, or Norwegian krona exposure, you got to be aware of that as well. But the fact of the matter is, the dollar rallied pretty aggressively going into last week, and actually, I'm going to tell you, it caught me off guard. I was playing the euro to the long side last week, and my line in the sand was basically, you can see it was well, I'm not talking about the dollar index, but I'll show you where it was in the euro, because it was at 112.50. But you can see the dollar index, we had this double top. We tried to break down. We hit the 200-day moving average. You can see the 200-day moving average right here, and we rallied pretty aggressively off of that. And this was on Friday of last week, and then you can see the dollar's just been a nonstop rally ever since. We are back into the resistance zone. So I suspect that going into this week, whether the dollar breaks higher like that, which we quite possibly could, or we reverse course and we head lower from this current resistance zone, has more to do with the Fed on Wednesday. All right, so since we had such a strong move in the dollar on Friday, going into the weekend, I'm assuming we're going to trade up towards the upper end of this this resistance zone, and maybe even to challenge this previous trend line before the dollar finds its pulls back a little bit or consolidates ahead of the FOMC. Again, I think what's really important here is what the Fed does, not necessarily what they do, because the Fed should keep rates on hold, but how they prep the market for July's meeting and then moving forward. So if the Fed is dovish, that's expected. But if the Fed is very dovish, that is when the dollar would actually reverse. But if the Fed, if they're dovish but not extremely dovish, we could see the dollar, retest these highs. I think that's the risk right now, is because you had so many people that were shorting the dollar index, or I say the dollar index, but however the market is playing the dollar, you're shorting the dollar, and then you have it moving up in your face. I think there's a risk that the dollar could continue higher. The market started pricing in pretty aggressively future Fed cuts, and if that's just looks like it might not be the case, and the Fed doesn't live up to those dovish expectations, we could see the dollar break out into new highs, and that would, like I said, that would catch a lot of people off guard, because this double top was setting up perfectly. And like I said, I personally was trading the euro on the long side when we came down to this 38% retracement. You can see, I played the euro as it was around the 113 level. My cost average was. It got down to 112.50. It broke below 112.50. It stopped me out. And because what I was thinking was that we were going to reverse off this trend line and move higher. Okay, and then retest the 200-day moving average. That didn't happen on Friday. On Friday, it broke through, and I took a loss. But how many people have been trading the euro on the long side, expecting the euro for to break out? Now, you're looking at the euro dollar, and I'm going to adjust my lines a little bit here. And I want to take you maybe a little lesson in technical analysis right now. So at first, I was looking at this high on the euro dollar, which was back in September of last year, the spike high back in March, and then that was the trend line, right? And then as you can see, my stops were like right here, and I'm like, okay, well, I know my risk. Broke below the 112.50 on Friday, and it stopped me out. All right, so I took a loss. Now let's adjust these a little bit. So when you're drawing a trend line, what I attempt to do is hit as many points as I possibly can when you're talking about the wicks or the bodies. And if you drop this trend line a little bit to where you touch this trend, this wick right there, that wick right there, and you could honestly, you could go, well, maybe I just drop it right through the wicks, not even to the bodies here, but you got another wick there. You have this one here and this one here. Maybe the trend line actually comes in much lower at 111.80. So the fact of the matter is, the euro may be weak right now, but there's a possibility that we could pivot right around this 111.80. Now, like I said, we closed weak, so I would expect there's a little bit more momentum that takes us further, and it's quite possible. But I would be a little cautious ahead of the Fed being short the euro or long the dollar if the euro is trading around this 111.75, 111.80. Okay, because that may have been a little, just like a little false break, took us lower, took us into new trend lows. Now we're back retesting this trend line. It's entirely possible. So all I want to say is if you're looking for some support ahead of the FOMC, it might be at this 111.80, 111.75 level. Now, it's not just the euro, because remember, we're dealing with the Fed in general. Let's take a look at the cable, okay? And we do have the Bank of England this week. That's right. And you can see the pound has come back down to the 126 level, which I think is very key here. Now, the problem with the pound, as you all know, is you have Bojo or Boris Johnson, who looks to be the next prime minister, and the odds of a no Brexit deal are rising. And the cable, theoretically, especially if you tack on a Bank of England that is fairly dovish, and then a Fed that's not as dovish as the market expects, the pound could really start to break lower. Flip side is we are trading at the 126 level, which I think is pretty key support. So I think while you're above this 125.60, 125.70, you don't want to be super bearish, especially ahead of the FOMC. Post FOMC, we'll see what happens with the cable. Let me move this over here. Okay, but we are on some key support. Let's also talk about the Aussie. Even though we don't have the RBA meeting this week, okay, even though the RBA is not meeting, we have the RBA Governor Lowe is speaking Wednesday night, which is actually Thursday morning in Australia, and the Aussie's trading at these trend lows. Now, one of the problems, well, not trend lows, but new trend lows as of this last move. Okay, we are coming to 161% extension of this move. You can see here from the lows right here, this last jolt higher. 161% extension comes in around 68.25, and then if you take the entire move from this low to the high, that's 127% extension. So 68.25 going to offer some support. We do have this spike low that happened in Asian trade. I think it was January 2nd, I believe, if I'm not mistaken, and this low, depending on your data feed, it might be a little off, but we haven't tested that yet. But actually, I think the Aussie is holding up fairly well, despite the ongoing U.S.-China trade war that's happening right now. That doesn't mean it's going to continue to hold up. I'm just saying it is holding up relatively well. But you can see this 50-day moving average is really capping the Aussie right now. However, like I said, it wouldn't surprise me if the euro found some support down at 111.80 and the Aussie found support at this Fibonacci confluence here of these two extension levels at 68.25, and knowing that the cable is trading around the 126 or 125.65 level. Okay, now the other side of all of this support that you're seeing here, whether you're talking about the euro support, the cable support, the Aussie support, okay, is if the Fed is surprisingly not dovish and the dollar really starts to rally and we start to break out. If the euro breaks down, the pound breaks down, the Aussie breaks down, we haven't even talked about the Kiwi or the Canadian or anything like that, but if we start to see those moves really develop across the board, the dollar could really gain some strength. And so it all really hinges on the Fed on Wednesdays. So One of the last chart I want to bring to your attention, and remember, if you guys are like, oh man, what's Blake think about the Kiwi and the Canadian and the Swiss franc? Well, join ForexAnalytix. It's $1. Do it for 10 days, and you can see my analysis is on the basic technical analysis every day of the week at the end of the day, but also throughout the course of the day. I do a lot of these updates. You can see these intraday updates. Most of them are done by myself. Some of them are done by Paul Franco or Steve or Amanda, but I do always the end of day analysis if I'm in town. So you can get it on all the majors. Because I have limited time this morning, but just join ForexAnalytix and try it out. So this way you have my analysis throughout the course of the week as it's developing. Okay, because I do analysis on the Kiwi, I do analysis on the Canadian, I do analysis on the peso, so on and so forth. But the last asset I really wanted to talk about is gold. Okay, because gold. Let's go over to gold. Both gold and silver, really. Gold, obviously I need to talk about it because of the key resistance that we're at. And I know I sent this out on Friday via Twitter. If you follow me via Twitter, I said, hey, if you're going to short the gold market today, or if you're going to short the gold market, today's the day. And that was on Friday, because we were up at key resistance, and we were at 1352 when I sent out that tweet. Because you want to talk about really manageable risk. I mean, if you short gold, at 1350 whatever, 52, 55, whenever you ended up getting short, your risk is manageable. You know that if we break above this 1360, it is a massive breakout, like massive, like massive. Like if we break that, it's gone. All right. So you can short it right up into this number, and the fact of the matter is, if we break above it, it's probably going to go a lot higher. So with that being said, I don't think gold's going above that trendline resistance ahead of Wednesday. But if you really want to know what the dollar's reaction is going to be, or what the continued reaction is going to be following Wednesday, you have to watch gold. Because in the event that gold breaks 1360, that would signal to me that the dollar index is actually going to break down. Okay. The flip side to that is if gold actually does, if gold continues this reversal from that key resistance, which, it's pretty key resistance. We start trading back towards 1320 or 1300, then wrong chart here. That would signal to me that the dollar index is actually about ready to hit new highs. All right, and instead of this being a wedge and double top, this could end up being more like a channel, an upsloping, an ascending channel, which would take us, up towards 100 on the dollar index. So I think gold will tell us a lot on Wednesday afternoon. All right, and it's not just gold too. You can look at silver. Silver, key resistance is at 1511. That is the 618 retracement of that high right there, that spike high, and that low that's capped us. You can see all the horizontal resistance through here. Obviously if we break through 1510, 1511, that probably is suggesting that gold's going to make a run at that 1360 and maybe even higher, and then silver could trade up towards $16. But a lot has to happen in order for silver to move like that. We need to see a reversal in the dollar lower. We need to see gold moving higher, yada, yada, yada. So anyway, but I will be watching, not so much silver. I'll be really watching gold on Wednesday, post FOMC, because I think gold's going to really tell the story of what's going to happen in the dollar. Like I said, if you want analysis on the other majors like the dollar yen and some of these yen pairs, on how I feel about them, just try ForexAnalytix. It's $1 for 10 days, and this way you get all of our analysis, on your mobile device. You get it on the desktop. You get emailed updates if you need those. If you need it emailed to you, you can access our chat room and all that fun stuff. So anyway, guys and gals, if you found this video helpful for you going into this next week, make sure you click the thumbs up button while you're on YouTube. It makes us feel good that you guys are appreciating this free content that we provide to you. Also, subscribe to the channel so this way you don't miss any of our interviews that we do on the face webinars, or you don't miss any of these video updates when we do them. And guys, for those of you that are dads, I hope you have a great Father's Day out there. Hope your wife and kids treat you to a day of beer, sitting on the couch, relaxing, not doing anything. Those are the best Father's Days. Or maybe playing around golf with your family. I don't know. Hopefully you guys have just a great, wonderful Father's Day. I'll see you on the Face webinar tomorrow morning on Monday. Have a great one. My name is Blake Morrow with ForexAnalytix. Talk to you soon.